COVID-19 has accelerated the adoption of new technologies for the changing diets and new generational desires. Join the discussion with leading experts, discover what new trends are underway, and what leading companies are doing to stay ahead.
Hi, my name is Eric Allen Rapp. I am a partner with the venture investment area of Vext Fund and investing in food tech companies. Vext Fund is the sovereign investment fund of Denmark. I am here today joined by three guests from around the world, all investors, all focused on food and agriculture, each representing a different type of investor, and all of us experiencing similar thoughts and challenges in the world that we live in today. I will start by introducing my guests here, and then we will just jump into some discussions. Based in the U.S., we have Steve Sanger, who is a founder and partner with Evolve Ventures. Evolve is a $100 million venture capital fund that's backed by Kraft Heinz that invests in early stage companies across the food value chain. Based in the Netherlands, we have Linda Bunder, who's part of the investment team of Rabo Corporate Investments, the investment arm of the global food and ag bank, Rabobank. And she focuses on early stage food and ag investments with a particular interest in sustainability. And based in Israel, we have Nadav Berger, who's a co-founder and managing partner of early stage food tech investor Peak Bridge Partners. They're the only venture capital fund to be an official partner of the world's largest ag food and innovation initiative, EIT Food. And so this is an interesting group because I'm with a team backed by the Danish state. Steve's fund has close ties to Kraft Heinz, which is one of the largest conglomerates on the planet. Linda is with a global bank, and Nadav is with an independent VC. And all of us have certain things that we've been experiencing over these times, looking at investing during times of COVID-19. So what I'll do here is let each person introduce themselves for a couple of minutes, and then we'll dive into some questions. And we'll start with Steve. It's on you.
Yeah, thanks, Eric. Pleasure to be here. So as Eric mentioned, Steve Sanger, partner with Evolve Ventures. We're a $100 million venture capital fund backed by Kraft Heinz. So Kraft Heinz is our single LP. We're a little bit unique with our corporate venture capital fund in that we're structured in a way similar to a traditional financial venture capital firm. All of our team members have carry on the deals that we've invested in. And my partner, Bill Pescatello, and I put our own personal capital into the fund. So as Eric mentioned, we invest across the food value chain. I spearhead our team's efforts in looking at opportunities within food tech. We're primarily Series A, Series B investors with a check size of anywhere from $2 to $5 million per deal. We've made 8 investments to date, looking to do more. When I was on a panel last year in Israel, we had not invested in Israel. We've since invested in a company called Fabric, which you may be familiar with. That was our first investment in Israel, and we certainly look to do more. So the thing that I'm trying to navigate in this very uncertain world is how to do deal making when you can't meet entrepreneurs and it's all over Zoom or Skype or Google Hangout. And so that presents quite a bit of difficulty and something that we're navigating amongst everyone else on this panel. And how do we operate in that uncertain environment?
It's a really great intro to Linda, who will present herself now. Thanks.
Yeah, thanks, Eric. And it's a pleasure to be here. So as Eric mentioned, Linda Bunder, I represent Rabo Corporate Investments, which is part of the global food and ag bank, Rabobank. We have an allocation of 2 billion euros for private equity investments, funds in funds, but also 125 million allocated towards venture capital investments in food and ag. We invest along the value chain in similar stages like Steve. So, we do late seed, Series A and B mostly. And we currently have a portfolio of 11 companies that is in the US, in Western Europe, but also 2 investments in Israel. And the aim of the bank really setting up this fund or initiative is to leverage the knowledge and also the network of the bank to actually push companies and innovations through that commercial rollout phase that can be so difficult if you don't have that warm connection or the warm contacts. So as I'm listening to, everything that's happening in the world and also to, of course, the point that Steve made, we're also struggling to do investments during this time. But I think what's also important to consider is, let's say, the challenges that the companies that we try to invest face. And obviously, one of their greatest challenges is now to find partnerships, not only in the companies that finance them, but also in their strategic collaborations, to find those partners that will help you stay alive, help you move forward, and actually create value in these turbulent times.
Linda, thank you very much. And Nadav, on to you.
So I feel like the host here, being based in Tel Aviv, because it's at the end of the day, it's the annual Israeli Food Tech Arctic Summit. And thank you for coming. So born in Tel Aviv, Israel, my late grandfather came and started the oil business in Israel, edible oil. I think that we became the largest producers of fats, oils, and margarines in Israel. Then we acquired big CPGs. So for 3 generations, we were producing food. So to some extent, I know food since I was mumming. But I got into technology 13 years ago through an application lab, which I co-founded named Food Lab. But then this drove me to create the first fund in Israel to invest in food tech, in Food Lab Capital. So first mover advantage, I was lucky to invest in some of the companies that became the flagship of the Israeli food tech, like Dumatok, InnovaPro, NextFirm, and so forth. But I had a more ambitious vision, and I met my co-founder, Eric Sieber, in London, and we have decided to do PickBridge, to create PickBridge. So PickBridge is trying to help the entrepreneurs to get to the peak, and then from one peak to another, and we believe that it's far more than the money. But at the end of the day, we do run a VC. Did our second close recently with 35 million euros AUM, and we'll go up to 100 by latest Easter. We invest in Series A and onwards. Did 6 deals, soon to be public, because at least 3 of them are kind of still under the radar. Some because of issues with the elections in the US. So PR people defer great news to after the elections. We are different because of 2 reasons, 3 reasons. Eric and myself grew up in the food industry, and we raised and managed funds. Eric did it for the Nestle Corporate Fund. We are members in the IT Food, as you mentioned. But at the end of the day, we are surrounded by top executives of food and venturing people like Ellen de Brabander from PepsiCo and Howard Shapiro and people that you know. So happy to be here. And the more global investors that come to Israel, it will be better for the ecosystem. And Steve, it's your turn now.
So just to round up this, because I think this is a really interesting group of people, because we're coming from different geographies around the world. We're coming from different backgrounds, representing different kinds of companies, and we're seeing a lot of the same issues. Linda, you recently invested in a company in Israel. We have not invested in Israel yet, but at Vext Fund, and last December, there was just an allocation that was made where we received about 1.4 billion euros for green investments that we're calling Denmark's Green Future Fund. And of that, a pretty good chunk is going towards food and ag investments for sustainable investments going forward. So this is a very, very big initiative for us, and we're looking for opportunities here. The reason why I mention this is because we just led an investment, a 14 million euro investment in an agricultural robotics company that was actually a little challenging, because for the first part of the investment, we couldn't even meet the founders in person. And towards the end of the investment process, I finally decided that we absolutely had to get together in person anyway, because very often when you meet somebody for the first time and you meet them in person, you establish a rapport. You can see body language. You can see when somebody is shifting or looking away much more than online. And when you're building a relationship of trust, you have to really be there in person. I'm curious for all of you, and starting with you, Linda, have you had any experiences along this, and what have you done to compensate for it?
Yeah, it's a very relevant question, Eric, and it is difficult. We were lucky enough to have met the team that we recently invested in right before COVID hit, so we didn't have that, let's say, that problem. However, of course, with all the companies that we're speaking to today, or have been speaking to since March, we will face that problem. And I have to say that, it's demanding for all of us, not only for us as investors, also for the companies that we're looking to invest in. It requires a lot of flexibility and, just a general level of trust towards the other person on the other end of the line, I'd say. But I have to be honest that we haven't found a good let's say, compensation for or an alternative for that physical meeting, and we would still require that before we invest, even though times are difficult to allow that.
That's interesting. Steve, how about you?
Yeah, I would agree with Linda. I think one of the things that we've spent a lot of time focusing on in this environment is the syndicate partners. So who's invested in the company. So I think that that's critical. Like, we always take that into consideration when we're looking to make an investment, but even more so now, if we can't meet the founding team face to face, I need to make sure that we know somebody on the cap table, right, who we have confidence with, or that we co-invested with previously, or someone that I know that I have a current relationship with, that I can reach out and they can vouch for that individual or the company. I think that's always been important, but even more so, I mean, during this time that we've been remote, one of our team members moved back in with their parents and their family for support in San Francisco. So we invested in a alternative sweetener company focusing on sweet proteins in the Bay Area called Joywell Foods, and there was a social distance tasting that occurred in a grocery store parking lot. So you've got to get really creative, but we also were in that deal alongside SOSV, which is a leading biotech investor who we know, Arvind Gupta and those folks over there at the time, plus Coastal Ventures. And so we were able to get comfortable with the deal. So I think it's just more important in this environment, really leaning on these sorts of connections that are happening here to really get intel on founders to compensate for the fact that you can't meet them face to face.
I get that. And Nadav?
So I think that I would be the extremist here. You all know that for me, it's all personal. And if I cannot have a great breakfast, lunch, dinner with the entrepreneurial founder, I don't do a deal with. Same, by the way, for LPs. So it makes things more difficult, but I think that you learn so much when you meet someone and see how he eats and how he orders and how he tips and how he behaves, and that this is a must do. And COVID is here to stay for the recent future, so we better think of solutions for that. The way that we tackle it is, first of all, we are global, and from day one we were using Teams, Zoom, whatever, from the beginning, because my business partner is in Dubai, I'm in Tel Aviv, we have an office in Europe and an office in New York. So we were online from day one. But part of the solutions that we have came up with is almost always co-invest. So we're working now on the deal number 3 with a Continental Grains company. So I can count on Brian from Conti. So when Brian is in New York, if something is needed, he knows everyone. Conti knows everyone. I can trust him. He can go there and visit them. So we have a group of, and it's a growing group. It's a kind of, I would say, friendly club of people that we would like to do business with. And I can count on them to A, be present in where they are, and B, count on their, on what they think about and their history. Second is we put a lot of emphasis to try and get LPs from all over. So even if we have potentially many LPs from Stockholm, true story, we would definitely prefer to have part of our LPs based in the US, Asia, Europe, and so forth, because LPs could help you also to cover the ecosystem, to screen. It's all about, intelligence and networks, and try to see if those entrepreneurs are kosher and successful and has track history and record and so forth. You can't do it from Tel Aviv and getting the right investment in San Francisco. So one of our business, our IC member is in San Francisco. This is a great help. So LPs, co-investments, and a lot of Zoom calls, Teams.
As Steve said, the agricultural robotics company that we invested in, that's called AgroIntelli, we co-invested with another investor who had actually been working with them in person for a number of months. And because they're a trusted co-investor, as Steve said, it helped us get the process going. And then as it was getting towards the end, it wasn't just about the fact that we wanted to meet them in person, but I felt that it was very essential to meet in person, because we needed to establish this rapport and this relationship of trust that went both ways. And so I think at some point maybe we're in a world where we need to start looking more hybrid, where we can meet under controlled circumstances, maybe in a supermarket or out in the field or somewhere, but to get to know each other in order to be able to have this dialogue afterwards, and then to take the business discussions online as much as possible. But I think it's not, in my view, it's not really a digital world as much as a hybrid world that we're heading into now. That's something that I think is quite interesting. There's a related subject that to this, which is that we have a bit of a conflict here, because in times of COVID-19, I've heard from a couple of you as well, something that it's on my mind as well, which is that it's almost, well, there's an increasing sense of urgency to invest in companies in this space. And COVID-19 has sort of highlighted some of the issues we have. It's highlighted the fact that we have a very fragile food supply chain that we need to fix. It's highlighted a number of things. So we find ourselves in a situation where we have almost an increased drive and motivation to make more investments, but we're held back by reality in the physical world that we live in. Have any of you had this kind of experience during this year? And I'll start with Steve.
Yeah, I mean, I think in terms of our investments, I think given the impacts of COVID, I mean, we've been really fortunate. We've invested in a lot of companies in the biotech space. So I mentioned Joywell Foods, focusing on sweet proteins, but also New Culture, which is making, dairy cheese without the cow. So we're big believers in, you leveraging better for you, kind of the better, and improved supply chain in this current environment. We're also spending a lot of time looking at food as medicine concepts during this period. I think that you have consumers that are thinking about their health quite a bit in this environment. So we're spending a lot of time kind of thinking about, are there plays to kind of impact human health as it relates to food, whether that be incorporating better for you ingredients into products, prebiotics, probiotics, addressing microbiome health. Those are things that we're thinking about. And we're also, I think, looking at sustainability, even more and more. We spent a lot of time looking at sustainable packaging in this environment as well. And so those are just a couple of areas that we're looking at. We're also looking a little bit at Cell Ag as a fund. And there's a lot happening in that space, which everyone's well aware of, but really kind of thinking about where does the supply chain head in consumers' demands in this environment? You're seeing more of a trend toward improving supply chains, healthy eating, worried about health, and those are areas that are very much top of mind for us as a team and our fund.
It's really interesting that these areas that are all related to food are getting a different kind of focus. For you, for example, you're looking at Cell Ag, which again is related to supply chain, it's related to health, it's related to climate. It's almost as if, in some ways, when we say food and ag, sustainability is much more attached to those two words than it used to be. Which is why I'm curious about the prioritizations. And Linda, when you're looking at priorities now compared to 10, 12 months ago, have the priorities of what you find interesting shifted?
I would say partly. Like the pandemic has changed the world, but I would say it hasn't so much changed the way that we're investing. So, of course, we're more cautious of investing in industries that are struggling at the moment. But I think we're also very well aware of the fact that many of the F&A innovations that were already there or lurking under the ground have actually been propelled by this pandemic. Some have already been mentioned, stability of local supply chains, focus on nutrition, food security, but also, let's say, sustainable alternatives. When the way we evaluate our companies has changed a bit, not so much maybe in let's say the stage that we're investing in or the type of due diligence that we do, but we do recognize that companies will need a longer runway. So I think we're stressing, let's say, larger rounds in order to get the company enough money to get it to the next stage, whatever, however long this pandemic may last. And another point adding to that is also flexibility of cost structure is something that we're extra focused on these days. Also for the company to stay afloat if this is going to stay with us for a little while longer. Yeah.
Nadav, how do you see that? Do you see that the size of rounds is changing, as Linda mentions, on their priority?
Couple of changes that happened since March. I was the lucky one who got out of New York on March 13th. So back to quarantine in Tel Aviv. So few insights. First, I envy you guys because I'm raising money to our fund. You guys are well supported. And the one thing that I feel in the last few months that actually raising money for a food tech fund has become easier. The awareness, and we are being approached by dozens per week now because it's the COVID and the pandemics brought this issue to the front page, and the connections and the surveys about mortality and obesity and diabetes. It's all there. I mean, what you eat is who you are, and this is how you can cope with the pandemics. And this made the entire space of food tech investments a very interesting topic for investors globally. Regarding the sustainability and impact, from day one, we decided, Eric and myself, that for us, this is our Tikkun Olam. This is our contribution for the world to invest in food tech that actually can influence and bring and create a better world. Eric has 2 daughters. I have 3. So this is very close to us. We have a venture partner full-time heading our ESG and impact. We became authorized member in the UN PRI. And this is a great influence on investments and on LPs as well. So it used to be the issue that if you raise money in California and you don't have a sustainability and impact agenda, nobody will talk to you. If you go to New York, if you say that you do impact and ESG, they will tell you you're leaving money on the table. So it's completely different approaches by investors. But now this is changing completely. Everybody is checking the boxes and making sure that you do the right thing, ESG, impact, and so forth. And this is a tick the box for us in anything that we do or invest in.
So, Steve, I've seen you nodding a couple of times during this when Linda was talking about doing larger rounds to make sure companies get funded, and when Nadav talked about also it being a checkbox. How do you view this, and how have you seen this in the companies that you've been looking at recently? Larger rounds, more funding, more runway?
Yeah, no, for sure. I think companies that are raising now need to raise to have 2 years of cash at minimum. And I think that, what we saw when COVID hit is, a lot of our deal making was done in the back half of 2019. So we were really fortunate in that when the pandemic hit, our companies were pretty well capitalized. I think one of the things that we saw is that fundraisings that typically might occur now in the fall, those were moved up to mitigate financing risk. And so what's interesting is that, VCs weren't vacationing a lot in the summer. I certainly wasn't. I was working really hard. I think that was the case with a lot of our peers, in that more work got done in the summertime than what you would typically see. And there's this end of the year push. And I think what we're seeing on the pipeline is a lot of companies raised or accelerated their fundraising to earlier in the year. So the pipeline's not as robust now. And I think we're going to see a lot of fundraisings in the back half of 2021. But we're also seeing, I think, from an investment standpoint, the later rounds are having an easier, companies that are a little bit more mature and have more proof points are having an easier time raising than earlier stage companies. So we're not seeing a lot of A's. Like, we're seeing a lot of seed extension pre-A types of rounds. And that's been a noticeable difference for us this year versus last year.
I can add from my experience. Steve reached out to us in summertime, and he said, do you know this opportunity from the US? And we didn't, and it's an exciting company. And we looked at the numbers, and it said, why are you raising money? And he said, well, I just want to make sure that they have a runway for 2 years. We don't need the money, and all the backers are top notch, but we want to make sure that they have cash in the bank for 2 years now.
That's a great position to fundraise from.
Yeah.
Seriously. It's interesting. We closed an investment on the food tech side. I closed an investment in July this year. And so, yeah, it was one of those summers also on this side. But what's interesting is that was a 4 million euro seed round. In February, just before the pandemic hit, we closed a 6 million euro seed round. and then this company was a 14 million euro round. These rounds are trending bigger. It doesn't mean that we won't do smaller rounds, but the companies have to be able to have a cost and a burn that matches the round in order to be able to have enough runway. And also, I think on our side, we need to be patient and understand that things may take longer than we expect.
Mm-hmm.
So I think this is a very, very interesting discussion, and one that could take much more than 25 minutes to really get around it. We've actually used the 25 minutes now, and I think for me, at least, it's been very enlightening. It's also been a pleasure to be in a situation like this because I get to meet new people. And Linda, I had not met you before. Steve, I'd met you in Israel, I think, last year, and Nadav, I know you. And all of you, I hope that we can find ways of doing business together afterwards as well.
Absolutely. Thanks, Eric.
Yeah. Thank you, Eric.
You so much for sharing
Thank you
this.
very much for
Your
inviting
thoughts.
us.
Thanks, everyone.
Thanks.